Here's what Fed Chair Jerome Powell had to say.
I think that the slower pace of cuts for next year really reflects both the higher inflation readings we've had this year and the expectation that inflation will be higher.
That was, of course, remarks from Fed Chair Jerome Powell in his post-decision press conference. Well, joining me now to break down the action is Michael Reinking, Senior Market Strategist here at the New York Stock Exchange. Michael, always good to see you, especially after a very big day for investors and the Fed.
Yes, yeah, it was definitely a big day yesterday, and I would say a little bit surprising, and definitely surprising to kind of what investors were expecting kind of heading in, but not necessarily in the decision that we got, but I think it was really more so in the reaction that we saw within markets, right? So. Investors were looking for that 25 basis point rate cut. And if you looked at futures probabilities, they were actually expecting the Federal Reserve to only cut 2 additional times heading into next year. So that was exactly what was delivered in the SEP. But what you did start to see was that the Federal Reserve message that they were much more concerned about inflation going forward than they had led on previously, right? So I think that was where markets were really kind of focused yesterday in that response. I also do think, and we could talk more about kind of some of that mixed messaging, but I think part of what we saw within equity markets is there was this expectation that this would be a clearing event, which would allow equity markets to resume to the upside heading into the end of the year. We didn't get that response by any stretch of the imagination, and I think heading into the end of the year, you did see some traders kind of throw in the towel.
Interesting. So what does that mean then for now into year end and early 2025 in terms of how we might see positioning adapt in the wake of this news?
Yeah, so I mean that's like the concern from here, right? Because we do move into a little bit more of you see kind of the trading environment gets a little bit, you see volumes start to thin out heading into the end of the year as people start to leave, right? And given such a strong year, right, people are looking to lock in some gains and say, you know what, like if we're going to have this volatile environment, why do I necessarily need to kind of step out on a limb from here? I can just take down exposure. We saw the VIX move into the high 20s, which is a kind of a crazy move in a one-day move, in response to what we had seen here, and that creates some kind of just systematic de-risking kind of within the marketplace.
So I want you to break this down for us, Michael, as our resident expert here on the trading floor. How is it that the economy is strong and Powell's saying he's, quote, very optimistic, end quote, about the economy? Of course, it's one of the reasons that we see inflation continuing to be sticky, and yet the market would respond to the downside in the wake of that news.
Right. So you actually hit the nail on the head, and that was part of the problem that we had yesterday, is that there were so many mixed messages that were coming from the Federal Reserve. They said, okay, the economy is performing well, and the labor market is moderating, but it's better than we had expected, yet we're cutting rates, right? And we're looking at inflation expectations for next year that are moving higher, right? So the data didn't necessarily fit with the Fed's reaction. Now, interestingly enough, we saw a dissension, the second dissension, kind of in recent times. But if you looked at the dots for 2024, there were actually 4 officials that were pushing for no rate cut yesterday, right? So there's quite a bit of dissension in the room.
Interesting. I want to talk more about inflation. Of course, any American shopper knows that inflation has been sticky, both from a goods and a services perspective. It was interesting that Powell noted that potential tariffs, as the president-elect promised on the campaign trail, were not yet factored in, presumably so, to this inflation forecast. And so what more can we glean about these clues for our viewers about inflation?
And so that was also a very interesting point during the press conference yesterday. It hasn't got so much play yet, but the chairman did say that some officials had started to factor in potential Washington policy into their inflation expectations. Some had said they didn't, and some didn't give him an answer as to whether they were or weren't, right? So just adding to this mix of uncertainty and questioning in terms of what we're actually looking at. He also went back, interestingly enough, and pointed to the Teal book from 2018, where the Fed ran a scenario analysis looking at how they should react to tariffs, right? So he's starting to point us in the right direction and to understand how the Federal Reserve may react going forward. There were some small dovish takeaways from that, with the Federal Reserve suggesting that if inflation expectations stayed anchored, right, and those price increases were short-term in nature, that you could look past tariffs, right? But it did bring kind of Washington to the forefront, within the press conference, which is not something you necessarily wanted to do, right? Where you can kind of get right back in the crosshairs of President Trump. One other thing I would highlight into the weakness at the end of the day. Yesterday, right around 3:30ish, that stopgap funding bill for within Congress also fell apart, right? So that added to some weakness in the sentiment, as you see that the very kind of slim margins in Congress, right, is going to make it difficult for the president to push forward his policies next year.
And could that mean a potential government shutdown?
There's a possibility, but I think we'll work past that, right? I think more so the question just really remains: how are we going to, they have a very aggressive agenda that they are trying to set out in that first 100 days and getting into, as President Trump takes office, and it's going to be a difficult time period to, it's going to be difficult for them to move that through.
Michael, I wish we had more time because there's so much to digest today, but always appreciate your time, of course, joining us here on set ahead of the market open. That's Michael Reinking, Senior Market Strategist here at the New York Stock Exchange.
Thanks for having me, and have a happy new year if I don't see you again.
You too. Happy holidays.